Hi guys, today I want to walk you through the trades that we took this week and the trades and why we took these trades. And if you listen, I want to walk you through the process. And at the end of this video, I'm gonna have to tell you 5 things to avoid if you want to become a profitable professional trader. So before that, I'm gonna have to walk you through the trades that we took. My name is Nice Henry from Millionaires FX. This is the best trading platform you can find anywhere in the world. If you want to be a part of us, make sure you hit that subscribe button. Make sure you like the video. If you have a question at the end of this video, drop a comment. I'll try as much as I can to respond to your message. So let's dive right into it. So the market opened with a retracement on Monday, and we started going back up, and that was because the market started a downtrend. So on Monday was a retracement, and then we didn't take the trade because we wanted to see the behavior of the market. We needed a template to trade from, so there was nowhere to trade from, so we had to take it slow. So but on Tuesday the market opened and then it started falling. So when it started falling, we wanted to make sense of what the market was doing. So what we did was that we had to wait, and the market was consolidating, but later on it broke out of consolidation. It formed this nice triangle. So then when it broke out of the triangle, I was looking for an opportunity to go short, and then the opportunity came when I saw this price action here, and then I was waiting for the market to give me a kind of confirmation. So what I started seeing the pin bars, and then I was seeing this railway track. When I saw the bearish momentum, the railway track, I knew that okay, that was an opportunity for us to go short. So we went short, and as usual we were able to kill it. 1:2 risk to reward, and that was the only trade we got, the only real move that happened on Tuesday. And on Wednesday we started with the consolidation again. The consolidation was so much so, but what we did was to wait for a breakout, and we got a nice breakout trades, and we targeted the high from the previous week, and that was it. We were able to get a nice 1:3 also. The market smashed all our TP, and then that same day the market formed a W pattern, and when it tried to reverse back up, we got in again, and we got a nice 1:2 risk to reward. And then that was the only move we were able to get that day, and we were very, very satisfied because we had killed the market. So the next day, which was on Wednesday, the market continued to fall and fall and fall, and we were also in this nice consolidation. And then when it broke out, I didn't know where to get in. So what I did was that I had to draw this line, I had to draw this level, because it was not going above. It always come to the level, and then it goes back up. You come to the level, go back up. So I was waiting for it to break out of the level, and when it broke out of the level, boom, that was when we got into this trade. And then we targeted a higher time frame support level. So we were targeting a 1:7, but we managed to get about 1:4. But that was okay. We took it like that. We take whatever the market gives to us. And the next day the market worked its way up, and then we knew that okay, the market worked its way up on Friday. So we were hoping that we were going to get a reversal. So we took the first entry somewhere here for a reversal to the to the downside, but guess what, the market spiked up and kicked us out of the market. So we said, okay. After they kicked us out, I was also hoping to get that breakout again to the downside. Instead, it didn't happen. When the market started to pick up momentum to the upside, I said, okay, I think we are bullish again today. So we took that long trade and we were able to get that 1:2. But what we targeted was 1:4, but we get 1:2 risk to reward, and then the market started to form an M pattern, and then we had to close our trade. So we had a nice trade on gold. I think we had only one loss on gold, and then we were able to cover our loss and make a lot of profits in that on that Friday, that non-farm payroll news. So we still were able to get something out of the market, something nice out of the market. So the next trade we were looking at is Nasdaq. So we killed Nasdaq this week. Nasdaq was completely murdered, I'm telling you. We killed Nasdaq. So guess what happened? The market opened on Monday. We didn't take any trade because it was all consolidation, but on Tuesday we wanted to get the initial behavior of the market, so we know what to do. So but when we get this nice reversal on Tuesday, we saw this level, the market was consolidating around this level, and then it gave us an M pattern. We decided to give it a shot, and boom, that was it. We targeted 1:4, but guess what, the market did almost a 1:10. Even after we closed our trade, the market continued to fall like hell. So the next day, Nasdaq also worked its way up, and when it got to this resistance level, it couldn't break it. It tested it the first time, couldn't break it, tested it the second time, tested it the third time, and then we saw the M pattern. We said, no, we don't think they're going to be able to break these levels. From there we went short and targeted the high of the previous day. The product targeted the low of the previous day, and it didn't waste time. The market worked its way down to we were targeting about 1:10 risk to reward, but we were able to get about 1:8, and then the market pulled back up, so we took our profit like that. Like we say, we always take what the market gives to us, so we take what the market. We were supposed to take this trade. I saw this second one, but we didn't later take it because it was getting so late that night, so we couldn't take the trade. I was so tired, I had to rest, and the next day we started with the consolidation again, and guess what, someone was saying Nasdaq was bullish because the market did a stop hunt. It started to break out to the upside after a long consolidation throughout the day. It broke out to the upside, and a lot of people thought it was bullish, and they were keep buying the market and buying the market. But I didn't buy the market because I knew we were in a downtrend. So I was not confused when I saw this. I knew we were in a downtrend. The week has been very bearish, so I wasn't going to buy a market that was in a downtrend without a strong confirmation. So when I saw that the market started breaking back into the 21 moving average, I said, okay, I think it was time for us to go short. So, and we went short, and we targeted the low we've been targeting this low for a long time, but they refused to go down. So, but no problem, we managed to get a 1:1. We were targeting 1:8 really. We get 1:1, but that's what the market gave, so we take it like that. And then the market formed a W pattern and evolved. We couldn't take this because it was late. I was tired. I was out of the market. Couldn't get so many move. I could only do so much. But on Friday, the market fell like hell. The market started with a consolidation again, and then started working its way up. I was very patiently waiting for the market, looking at the levels until it got to this level I was targeting from a long time. And then when it got back down there and it formed this, started breaking down, I was like, okay, it's time to go short on this market. And guess what, the market smashed all our levels and hit all our targets. TP1, TP2, TP3, all was completely smashed, without mercy. And then this trade is a 1:4, 4.72, almost 1:5 risk to reward ratio. It was a good one that some of my students made a lot of money from this trade, I can tell you, for real. So my students make a lot of money from this trade, and they were so happy. So we got some trade from GBP JPY. I think I didn't take much trade from GBP JPY, but we got some really nice moves. This one was on Thursday. We got this move. This one is to 2.25 move from Thursday. So why we took this trade was because the market worked its way down and then to this trend line and previous day's low, and then it started to reject, and then we started to form this W pattern, and I was supposed to go in here, but it came down again. And when I saw this, saw it rejecting, consolidating around this trend line, I had to go long, and guess what? We smashed that one is to 2.25 reward, risk to reward. Look at this one again. This one was on Monday, right? This was on Monday. Okay, that was on Tuesday. We didn't take a trade on Monday. On Tuesday, we called the nice trade on Tuesday. Look at this one. You pull back into the previous day's high, and then from there we started seeing consolidation, and then when we got the M pattern, we said, okay, let's go short and see what the market gives us, and we were able to catch a nice 1:4.25 risk to reward ratio, and it was a great trade. Trust me, no losses, only win. And then we caught one trade on GBP USD. I think 2 trades this week. Okay, 3 trades. The previous day on Monday we caught this nice bullish move on GBP USD on a W pattern, and then the market worked its way down to this level that I've been looking at for a while, and then it started consolidating, and then we went bullish from there, and we were able to catch this nice trade for 1:2.24, but we were able to get only a 1:2, and then the market started retracing back, so we closed that trade, and the next day it worked its way back to that high, and from there we were able to catch this 1:5 risk to reward ratio, and we targeted the low from the previous day, and that was it. The next day was almost consolidation, so we didn't take any trades, and that was it. And then on Friday we caught this nice one. During the news we were targeting this high, but it spiked up and went down, and then the move resumed again, and we were able to get, I think he stopped us out, and then we got in again and got the 1:1, and then the market reversed, and then we closed our trade, and that was it for the week. But so far the week was awesome. We made a lot of money from this market, and then I think we got a trade on Euro USD also. I think we got a trade on Euro USD. Yeah, we got a couple of great moves on Euro USD. Let me check. Yeah, we got a lot of nice mad moves on Euro USD. Can you see this mad crazy move throughout the week? From Monday, we didn't take any trade on Monday, but on Tuesday we got a 1:1 on Tuesday. See this one, 1:1. We got this 1:1 trade on Tuesday. We got 1:1 on this one, and then on Tuesday we're able to kill it real good. We got this nice move, 1:1.72 on Tuesday. On Wednesday was only consolidation, so we didn't see a real move, but on Thursday we got this 1:3. You can see the move, how accurate we got in, got in somewhere here, after the W pattern. We got in somewhere here, and then we targeted this high, and the market smashed all our take profits. 1:3.22 risk to reward ratio. So that was all the trades we took, and then we caught this last one on Thursday. I think we killed Euro USD, like it was completely murdered. This one was 1:13. 1:13 risk to reward ratio. You can see the trade after we got this M pattern and the market started breaking down. I was waiting for it to break below this level, so I started with a small position at this point. It kept falling, so I allowed it to continue to fall. Then when it broke below this line, this support line, that was when I started loading it up big time, because I knew that okay, that was the confirmation I needed. Because at this point I didn't want to load it up. I was only taking the small positions, getting in with small positions, and I was watching the market as it keep broken down, getting broken down. But immediately it tested, it broke down and went back inside. I was watching the market, then it started falling again. When it broke this level at this point, I was loading it up big time, and trust me, the result was so good. So we caught a lot of trades this week, and this week was so awesome. So we would have done so on Euro USD, but I didn't take any trade on Euro USD on Friday, because we've really done a lot of work on these trades. So today I want to talk about the 5 things you have to avoid if you want to be a pro trader. Avoid these things in your trade if you want to be a professional trader. So number 1 is fear and FOMO. You have to have emotional control. Emotional control comes with knowing what you're doing in the market, knowing where you are in the market, knowing the things you're looking for in the market. When you know what you're looking for in the market, you can trade, you can identify patterns, the things, setups that you want to trade in the market. You have to wait for those setups. When you can follow your setups, follow your strategy religiously. For those that trade the strategy, I don't trade strategy, I trade the setup. I don't trade the strategy. For those that trade the strategy, if you wait for your strategy to show up, you follow it religiously, and the more you learn about the market, it's going to reduce the fear and the FOMO. Fear of taking the trade. I had a great trade, and I called out a great trade on the group, and one of my students, he was on a 100K challenge with a prop firm. He was scared of taking the trade. I said, why didn't you take the trade? The trade was going well. He didn't take the trade. He couldn't take it because he was so scared. He said, I lost a challenge before in the past. I am scared that I'm going to lose. I said, no, you have to be willing to take a trade. You have to bear in mind the fear. What happens yesterday has nothing to do with today's results. Understand that, and have emotional control over your trade. That's number 1. Number 2, do not overtrade. Know the setup you are looking for. When you get them, you trade them. When you don't get them, stay away from the market and observe the market. You cannot get all the money in the market. If you try to do it, you're going to lose more. So stay away from the market. Stay away from the things you cannot control in the market. Control the things you can, and stay away from the things you cannot control. Do not overtrade. When you find yourself taking every trade, you're trading back and forth, it means you don't have a plan, you don't have a setup, you don't have a game plan. If you have a game plan, follow your game plan. That means you're not chasing price. You're not trading because you just see everything you look for. I have a setup I want to trade. Let's say, assume I trade. I have a setup I'm looking for, a level I'm looking for. Then if I get like an M pattern confirmation, or W pattern, or double top, or triple top, head and shoulder, in those places, that's where I want to take my trade. I know that I'm okay. This is additional confirmation for me. You must have what you are looking for in the market, and you follow it religiously. The third one, you have to allow your trade to run. You have to have emotional control strong enough to allow your trade to run. That's why I am an advocate of spreading your trade. If you want to risk 2%, 3%, spread it 1%. Open 3 positions, so that at each level you want to take partial profit. Take money out of the market. I don't like to leave money lying around in the market. Take 1 or 2. If you have three positions, if I'm hit take profit 1, I'm taking out one of the profit. If you get to TP2, I'm taking out the second one. If you get to TP3, I'm taking out the third one. That's how to manage your trade and make sure you are getting what you're supposed to get from the market. Allow your trade to run. Allow the trade to run. Do not be in a haste to take take little out of them, because when you lose big, and when you win small. That's a disaster for your account. You have to allow that trade to run. You have to have emotional control to allow the trade to run, because it's in your favor. Do not be scared. Just make sure you can. I don't know how you do your own, but I like to spread my position into 2-3 places. When I hit each take profit, I'm taking something out of the market, so that I know that I'm securing my profit as the trade is running. So you must allow that trade to run. That's the only way you're going to be profitable in the long run. So if you don't allow your trade to run, you're going to find yourself taking big losses and winning small. You're going to be taking small profit and taking big loss. You're going to be taking huge losses and you're going to be taking small profits, and that's a disaster for your trading account. So you must watch out for it. Make sure you allow your trade to run. make sure you take big profits and take small losses. That's how professional traders win. That's how profitable traders trade. The fourth one is not using a stop loss. Make sure you use a stop loss. Some people trade, they don't use a stop loss. They say, after all, don't worry, it's going to come back, and then don't worry, the trade is going to come back. If you get caught up in a trend or in an impulsive move, and you are in the opposite direction, and you're hoping that the market is going to come back, it's going to wipe out your account completely. So you're going to be careful. You're going to be careful. If you do it in a consolidating market, you might get away with it. But if you do it in a trend and you're caught up in the wrong side of the trend, you're going to be, the market might not come back to you again, and you're going to wipe out your account, like I'm telling you from experience. So you have to be careful. Make sure you use a stop loss. Even if you have to allow the trade to run, make sure you use a stop loss. Allow the trade to run. Use a stop loss and allow the trade to run. So another thing, I have said it in my previous video, is market timing. Make sure you know the time when the market moves, when your setup normally play out. You need to understand the market timing. The New York Equity Open, the London Open, the Asian Open, you know the best time you like to take trades. Allow the trades to run. Know the market timing and avoid the time when there is less volatility in the market. You don't have any business trading in a market when there's no volatility. Then what are you chasing? I don't trade consolidating market. I don't like to trade in a consolidation, because you just go back and forth, and then you just get chopped off, when you try to trade the market like that. So you have to be disciplined. You have to master the market timing. If it's the New York Equity Open you like to trade, you have to wait for your setups at around the time when there's volatility in the market. If it's the London Open, you need to know the time when the market is moving, so you wait for the market at the right time, and you look for those setups you normally trade at that time, and if you find it, most likely it's going to play out in your favor. So I want to wish you a great week ahead. Next week is going to be a better week. A lot of money to be made, a lot of profits on the table. I want to urge you, if you're a struggling trader, you want to consider joining Millionaire FX. The free Telegram link is on the description. It's on the description. You can join the free Telegram link. I'm going to also drop the free Discord link. So you can join us on Telegram, you can join us on Discord. Watch the video over and over again. You're going to learn a thing or two. Also, I'm going to also try to let you understand that trading can actually make you profitable. It can make you rich, but you have to be patient. You have to be disciplined. You have to follow the rules of trading. I wish you a great week ahead. Stay consistent. Stay focused. If you don't have if you're struggling to find consistency, make sure you join Millionaires FX. Make sure you hit the like button, subscribe.